Good morning, everybody. Mike Vaki, PrincetonTrader.com here for NTMarkets.com with your Monday morning pre-market webcast. Okay, daily chart of the S&P 500 E-mini futures, the ES, currently trading 1994. We traded as high as 1997.5 in the overnight. And just as a quick review, here's what we've been talking about. We had our ride down the lower Bollinger Band. We bounced at 1890. That bounce turned into a multi-day rally. The red line here is the 50-day exponential moving average. There were 2 days this month, the 11th and the 12th, where the bears tried to turn this line into resistance. It had been support previously in April and May. That didn't pan out. Then they tried to turn the 20-day simple moving average into resistance, the middle Bollinger Band. That didn't pan out either. Then we had our shakeout on the Ukrainian news, went from 1961 down to 1937. That was the chance, that was the opportunity that the bears had to really take control of the market. And it would have left a pronounced lower high on the daily chart versus the old high, which was 1985.75. They blew it. They blew it on the same day, and they closed above middle band and established both of these areas as support after losing that reaction low. At that point, we've marched up 4 days in a row because there really was nothing at that point to really stop the bulls from making a move. We got through Yellen's speech and Draghi's speech last week. We dipped a little bit, but basically very minimal damage, and now we've gone up and made new highs tonight as much as 1997.5. So you see the gray line here. That is the upper Bollinger Band. That is at 2004.65. So in order to interact with that band, by the time we got there, it would probably take something in the area of 2006. So the way I've been looking at this and the way we've been telling our subscribers is we are certainly going to hit the upper band before we hit the middle band again. Whether we hit it in a straight line or not remains to be seen. And I would suggest that it's probably not the healthiest thing for the bulls to go ahead and hit this thing in a straight line. But it seems to be essentially what they want to do with some very minimal hiccups along the way. So we are still long from the reaction low day. Here, we're long 43.25. So we've been letting that ride. We tried scalp shorts all week, and they're not working. They're not working because there's essentially a bid. Now, we had a little bit more of a two-sided day on Friday, but Monday through Thursday, it was very difficult to get any traction on the short side. It was also very difficult to find a truly discernible dip to buy on the long side. So last week was a situation where you really had to be opportunistic last Friday on the move lower and then ride that stuff all last week if you were gonna be really profitable. So we've still got some left. We're still gonna ride it. The target is the upper band, and then we have to see if we're gonna go on an upper band ride or not. I'm expecting more two-sided trading this week as the sides jockey for position, but since January 1, 2013, when the market gets into this situation, there hasn't been a single time that it hasn't touched the upper band. Well, I should say 14 out of 15 times it's touched the upper band, but never not with the bands this wide has it failed to touch the upper band. The only other time it failed to touch the upper band on a move like this is right here. And let me show you what I'm talking about. See right here? It failed to touch them here. And I'll remove that. So it failed to touch them here. These are pretty tight bands. It went down and it rode the middle band for a couple days. And that was a move from 59.75 to 36.25. We're trading 97.5. You've got the middle band down at 49. So much wider. And after that, it came back up and interacted with the upper band. So it's difficult. It forces you to be patient. but you've really got to wait on the upper band here. Could there be a violent reversal today? Sure, but I would argue that it's absolutely going to be news related. And news is news. When news comes, it does what it does, and that's what this day here showed us. So if you're long, keep rolling up stops. If you're short, I would be small and understand the situation that you're in. And let's see what kind of week we get this week. If we get a two-sided week, then there's dips you can buy. There's rallies that you can sell, and you can trade it intraday while you're waiting for the ultimate move. But like I said, upper band before middle band. All right, everybody have a great one. Follow us on Twitter at Princeton Trader. Check out the website, princetontrader.com. Come check out the chat room. You can sign up for a free trial in the chat room over at thehammerstone.com. Just hit the drop-down menu products and hit Princeton Trader. We would love to meet you. Love to see you in the room. Okay, take care, everybody. I'll be back tomorrow morning with another webcast. Trade 'em well.